on to what's happening in the market, because there is change. There is change in the market. So it's not all good change though, but all change is good because it's how you look at the change that makes the difference. So national home values record the first decline in almost 2 years. So the national figures have finally shown a negative 0.1. It's only 0.1, which is more like a plateau, but it is a negative. So let's look a bit deeper. Oh, I was going to tell you about our very quickly about our December before I go into that. My dad has written a book. It's called Not Bad for a Boy from Belfast. I think it's an amazing book. He's a very, very inspiring story. So we wrote that last year. That was hot off the press in December. So if anybody wants a copy, please let us know. It will blow you away. Just put it in the comments and we'll make sure we get a book to you. So it's very inspiring and a great read. We had an 80th birthday, Anita's mum's 80th birthday. So happy birthday to Diane. We had Anita's birthday, 49. She's in her run into 50. So she's going to join the club very soon. So happy birthday to Anita and everybody else who had birthdays in December. What else did we do? 10th wedding anniversary. How could I forget? We've renewed Anita's contract due to good behavior. Or should I say, she's renewed my contract due to good behavior. She wanted me on a month to month. I said no. I said we've got to have a contract. So she's given me another 10 years. So there you go. We had a great Christmas. We did our Christmas at my daughter's house. She's 33. She bought a house through one of our members, Matt Brace. So thanks, Matt, for helping us get that done. But she bought a house in Mullaloo, and she had all the family on Christmas and did an amazing job. So we had a great Christmas. So not to forget what we did, because that's so important, because we work to live. We don't live to work. So it's nice to have a break and achieve other things in life as well as work. Anyway, let's look at the CoreLogic report, which is what I work on with regards to what's happening in the marketplace. So CoreLogic Home Value Index ended the year on a negative note with values down 0.1% nationally over the peak. If you could stop printing. Oh, it's mine. Okay. Nationally over the month after peaking in October and holding flat in November. This result represents the housing market catching up with the reality of market dynamics. Growth in housing values has been consistently weakening through the second half of the year as affordability constraints weighed on buyer demand and advertised supply levels trended higher. The first half of 2024 saw national home values rise 4.1, slowing to just 0.7 through the second half of the year, with 5 of the 8 capital cities recording a decline in values between July and December. In annual terms, Australian home values were up 4.9 in 2024, adding approximately 38,000 to the medium value home. 3 of the capital cities recorded a decline in values over the year: Melbourne, Hobart, and the ACT. On the other spectrum, Perth surged with 19.1% over the year, Adelaide 13.1%, and Brisbane 11.2%. So obviously there's still a 2-speed market happening. We'll discuss that in further detail. Although the mid-sized capitals recorded double-digit annual growth, it is clear these markets have passed their peak growth rate. December also marked a change in quarterly capital city rankings, with Adelaide overtaking Perth as the strongest market. So I think we've had our day in the sun. It's now Adelaide's, and so has Brisbane, by the way. So I think it's going to be Adelaide's day in the sun for the next few months, and then we will not see those type of gains again. It's my photo opportunity. Perth on so the December also marked change in quarterly capital city rankings, with values up 2.1 in December compared to 1.9 rise in Perth values and 1.3 increase in Brisbane. Perth, on the other hand, has seen a clear lift in advertised supply, which has provided buyers with more choice and less urgency, supporting a sharper slowdown in value growth relative to Adelaide. The most affordable quartile of capital city markets has shown the highest rates of value growth in 2024. Regional housing markets finished the year on a stronger note. We won't go into the details of those. Rental market also finished a year on a softer note, with the national rental index up just 0.1% in the month of December, to be 0.4 higher through the December quarter and 4.8 higher over the calendar year. This was the smallest December quarter rise in rents since 2018. However, the annual change in national rents remains more than double the pre-pandemic decade average at 2% per annum. The slowdown in rental growth is apparent across most capital cities and comes amid a reduction in net overseas migration. So migration is down, affecting both rentals and sales as well. Rental trends are likely to remain subdued in 2025 as overseas migration returns to more normal levels and the average household size continues to trend higher towards pre-COVID levels. With rental growth stabilizing and housing values starting to edge lower, gross rental yields are unchanged relative to December 2023 at 3.69. Of course, you can get a lot better, especially here in Perth, Adelaide, Brisbane. You can get up to 6, some 7%. And of course, if you want up to 10% return, Crawford's can help you up there in Port Hedland with amazing return on investments. So if you've got clients who are looking for 8 to 10 gross return and more in some cases, those guys are the people to chat to. So let's have a look at a bit of a look at the New Zealand. I always like to look at New Zealand, not only because we have clients checking in on the Google Drive and one or two here, but it is they are counterparts of us, and it's really interesting to see what they're doing, because New Zealand, being a bit more of a micro market than Australia, we tend to follow them rather than them follow us. Quite weird. Wasn't always that way, but I've noticed that over the last 10 years, that has been the case. So let's have a look at New Zealand. So home value decline in December sums up 2024. So property values in New Zealand fell 0.2% in December, making it the 9th drop in the past 10 months, according to CoreLogic. The national median value now stands as 803,000, which was over 900 not so long ago, which is 3.9% lower than a year ago and equivalent to a drop of around 32,200. New Zealand home values are also still 17.6 below the post-COVID peak, although 16.2% higher than the pre-COVID levels from March. So still 16.2% up, but they've lost half of their growth. At least New Zealand have lost half of their boom growth that they had while we were still slowly getting going. And then Sydney and Melbourne ran. And then, of course, Brisbane ran. And then Adelaide and Perth ran. And we're coming to the end of that run. They are well and truly halfway into what they gained. This is significant. This is, there's obviously clues here. I'm not saying that this is going to happen in Australia or Perth for that matter, but it's happening in New Zealand, and we follow what New Zealand does. But let's look a bit closer on why the market is the way it is. Or did I already cover that? No, I didn't. So just quickly, so the final months of 2024 have set the framework for a soft start to 2025. Lower cash rates should help bolster housing demand, but we don't expect lower interest rates to be the catalyst for a renewed phase of strong value growth. So tell your sellers that. I'm gonna repeat that. I want you to write it down. A lower cash rate should not help to bolster should help to bolster housing demand, but we don't expect lower interest rates to be a catalyst for a renewed phase of strong value growth. Very important for you guys out in the marketplace in both property management and sales. Rate cuts should support a further boost to the consumer sentiment and will provide some welcome relief to borrowers through lower mortgage repayments and a boost to borrowing capacity. However, it will take a lot more than 3 or 4 rate cuts to get interest rates back to the pre-pandemic decade average of 2.55. So a long way to go. Net overseas migration is expected to wind down further in 2025. I'll say that again. Net overseas migration is expected to wind down further in 2025. Not good news. The shortage of newly built housing is likely to remain a feature of the housing sector. We will not be able to produce enough houses in 2025. That is a fact. The human resource, the labor shortage is a reality. The materials increase in price and also the supply is at an all-time low and struggle. What this means is a slow recovery of new housing, because that could affect the residential housing nicely, but what's going to happen, like it always happens in Australia, is then we're just going to have this massive supply come 2026, 2027. Massive supply of built homes. I think, can't remember the figures, but it was 1 million dwellings, 1 million dwellings that they were building. So you can imagine 1 million dwellings getting added in 2027, over 2026, 27, 28. You can imagine what that's going to do to the market. So depending on what the interest rate's like then and what is going on, that could significantly further our strains. Hope not, but I'm seeing this. This is like all. I'm not often wrong, and I've been right before. So just it's not doom and gloom. We're going to talk about the optimism here just in a sec. So housing to become more affordable as value growth stalls and incomes rise. So that's going to be a positive. So there is headwinds, or there is some positives in the wind there. Okay, so let's look at Perth, because obviously that's a core market that we deal with. Only 4,778 properties for sale in Perth, so actually still quite low. I would even say it's very low, but it's on the back of obviously significant transactions. So nearly 700 transactions last week. And this is, for those of you who've been around for a while, January is a movement month. So lots of rental properties get snapped up and lots of properties sell and get snapped up. And from what I'm seeing on the figures, there was a lot of sales in December as well. So look, the outlook's still pretty good for Perth, but it is trending downwards. Okay, not horrifically and not panickingly, but it is. On the rental market, 2,303 properties for rent in Perth, still staggeringly low. with 783 properties leased last week. So, but January is a change month, and then we'll start seeing easing on that further. So that's the property markets, folks.